All right, ladies and gentlemen, welcome back to the channel. We are live and stocks are crashing part 2. We are in there like swimwear though. Don't worry, we got all of the coverage that you need to know heading into April 20th. 420 could be a very smoky day in the markets, if you know what I mean. It's going to be good though. Futures are already crashed. Already crashed. We're already smoky in the futures. Already pretty smoky in the futures. Down about 1.07%. So we'll see how these evolve over the course of this live stream. But doesn't look so good so far. You'd think 420 would be a good day in the markets, damn it. I don't know, man. I don't know. I guess not. I guess it's going to get a little smoky and a little grim out there. But money to be made. We do have Tesla earnings tomorrow. And they're on the chopping block. You guys seen what happened to Netflix, right? Right? Anybody going once, going twice? Sold to the Netflix put holders. Because, did you do very well? Not good. Cheese Chaser, what is going on? Let's go, baby. Ungans, what's up? What's up, bro? White. Jennifer Hendricks, what's up? Big Blue CNC, finally here. It feels like it's been a week since I watched a live. Let's go, baby. Holder of the shares in the house listening. I wish I got some I keep trying to say Netflix and Tesla. Nestle. It comes out Nestle. Netflix puts. Yes. Bueller. Anyone? Tesla puts about to print, in my opinion, not financial advice. Yeah, oh my God. I hope you guys realize the significance here. This does not happen. To get a large tech stock like Netflix to drop over 20% back to back, that's telling you something. I think the biggest thing it's telling you is that any company can get it. Rest in peace, Netflix bulls. Yeah, exactly. I mean, this is a chart of a dying company. Like, you can't even see the move like that we just saw, but it's another gap down. I mean, you're down here. Let's just put that into reference here. You're about 258. You're about down here. Like, this brings you back to 2018 levels. Like, beginning of 2018 levels. Like, disregard anything that's happened in the past 4 years. But, yeah, basically telling you that you're going to see a lot of clappage and carnage this earnings season. And it really goes to show that you need to see, like, stellar earnings or you're not going to be looking so good. Like, any one thing is wrong, forget it. Like, a normal earnings season, if Netflix had lost 2.5 million subscribers, yes, you would have fallen probably 10%. This thing fell 26%. That is not normal. Disney was bad too. Oh, yeah. Disney is I mean, I don't know. That's the thing. Like, my logic of trading for so long now, 4 or 5 years, it's like, okay, these stocks are down at their lows. Like Netflix, when they reported today, they were at their lows that they were at the lowest point after they reported last earnings. Like, they were already at the lows. To gap down another 26% from the lows of your last 22% fall makes you reconsider everything. Like, I don't even know about Disney. I mean, sure, I guess Disney has other aspects to their business, but and it's already super low. At the same time, so is Netflix. So it's really like, dude, is Disney gonna fall to like 80? Like, is that where Disney's gonna go on bad earnings? But yeah, Tesla is on the chopping block tomorrow. Tesla has a lot to prove with its valuation. Now, I do want to read you guys this report for anybody that is in the trading group. I just sent this out, but I do want to read it because it's very important, especially after what we've seen with Netflix. So this did come out today. It came out at 10:32 a.m. Unfortunately, I did not get Tesla puts today. I have the 2 free Tesla calls. But I'm probably going to get a decent amount of Tesla puts as well. So it says Tesla reports earnings Wednesday. Prepare for disappointment. Because Tesla is a popular, high-flying, high-growth stocks, investors want to see earnings beats that propel analyst estimates for future quarters even higher. Investors should prepare for disappointment this time around. Tesla will have a mighty hard time meeting analyst estimates for the first quarter of 2022, which are due to be reported after the market close on Wednesday, April 20th. The reason is fairly simple. Vehicle deliveries didn't meet Wall Street original estimates, and analysts haven't moved their earnings estimates since quarterly production numbers came out April 2nd. They were expected to deliver about 317,000 vehicles. That was April 2nd, and they only delivered 310,000 vehicles. So they missed that estimate by 7,000 vehicles. Markets, they kind of shrugged it off because we were starting to see that rally after the Fed. We were actually like in the rally, right? Rally started around March 14th, March 15th, and just kind of started to end here not too long ago. But it does say that was a record and an increase from about 309,000 delivered the previous quarter. But at the start of the year, analysts had expectations closer to 325,000 vehicles to be delivered in the first quarter. The delivery results were affected by COVID. Tesla's plant near Shanghai had to shut down because of a wave of new COVID-19 infections that local officials are struggling to contain. This is the key right here. I was trying to think of, before I read this for you guys, I was trying to think of like what would be the thing to clap Tesla, because I mean they always seem to impress. Last earnings they did fall about 11% though, so keep that in mind. Tesla did drop about 11% last earnings, but usually historically Tesla does go up after earnings, not always by a huge amount, but they usually do. I'm thinking to myself, I'm like, could not think of anything. The delivery numbers were already out. Now, this is the part that I was missing. It says, but even though the quarter's deliveries came in at about 5 to 10% lighter than Wall Street's initial expectations, analysts' first quarter earnings estimates have remained at about $2.27 a share for 3 months. Analyst estimates for first quarter sales about $17.9 billion haven't budged either. This is the key. Actually, it's down here. But I'll read this too. Now, all hope for an earnings beat isn't lost for Tesla bulls. The company reported $2.54 a share in adjusted earnings in the fourth quarter of 2021 on deliveries of about 309,000, and Credit Suisse analyst Dan Levy projects Tesla will earn $2.56 a share. Right here. But raw material inflation is a problem, with batteries growing more expensive during the first 3 months of the year. A basket of metals that goes into electric vehicle batteries on average cost 73% more in the first quarter from the previous period based on spot prices. Now, why is this important? The markets, they should understand this, right? They should. But analysts have not revised down their expectations based off of this, and it's highly unlikely that they will tomorrow. So there's these super high expectations from Wall Street, kind of not even factoring this in. And I think that could be the thing that does clap them, and it makes sense. That's why Elon tweeted out, he said, if costs do not come down for these metals and materials, we will have to enter into our own production. That's why you've seen a lot of pump and dump basically penny stock lithium companies, right? Miners that were going crazy around that time. So I think that's probably the only thing that could clap Tesla like that. But yeah, if you're increasing cost by 73% or even anything close to that, that's not going to be good. That's not going to be good. But that's only a thesis, obviously not a guarantee. Tesla does tend to be more resilient, but as we've seen with Netflix, like one thing is bad, especially on a stock like Netflix, which is the most expensive FANG stock historically, or Tesla, which is like one of the most expensive stocks on the stock market. Especially in that case, you really have to prove yourself. So I don't know. Maybe it's just bad vibes from Netflix, but I don't know. I don't think investors are kind of thinking about that. I honestly didn't think about it, which I probably should have, but 73% increase. Pfft, that's tough. That's real tough. Borg technology might be the next Mullen. What the hell? 35 million. Traditional telecom services such as voice conferencing, the connected segment develops wireless, smart, connected devices, and cloud solutions. I mean, it's cheap, but it is China, too. That doesn't mean, though, it couldn't rally. This thing does pop quite a bit, though. Huh. Yeah, I mean, it's 35 million market cap. That's what Mullen was. Like, specifically when I bought it was 35 million. That might be a good find. I'll have to watch that one. So many competitors for Netflix now, and Netflix subscription has become overpriced. See, I don't mind the price of it. I know some people might, but I mean, I think there's good value there. Like, don't keep raising it. Don't make it as expensive as like regular cable, but yeah. I have Netflix, Disney, Paramount, HBO Max. Feels like I need to cut some. Yeah, I have I pay for Netflix, Disney, and then I have HBO Max and Fubo TV that other people pay for. Yeah. That's the key, but this might save Netflix a little bit tomorrow. I don't know how much it'll do, but it says Netflix is exploring lower priced ad supported plans after years of resisting. Don't know what it'll do, if it'll have any effect. That 2.5 million subscriber loss is kind of what happened to Facebook, seeing their first ever, in this case, subscriber loss, and Facebook seeing their first ever loss to users the last quarter. And I think that really is going to affect Facebook too. I mean, this time around, if they have a negative user growth, like if more people leave Facebook than join, and they continue to spend a load of just too much money on the metaverse way too soon, Facebook is on the chopping block too. I mean, like that is that's a definite possibility. Now Tesla, You raise the cost like that, it's very possible, because that's kind of sticky inflation. Like commodities, they're not really going to come down in a substantial way until the whole Russia-Ukraine thing is dealt with. But at the same time, it's like Russia's taking over part of Ukraine. Like, even if you could do business with Russia, like you weren't sanctioned, you're not inclined to do business with them anyways. And a lot of those metals, stuff like that, comes from over there. Raise the mic, yeah. All I know is my puts are printing tomorrow morning. Yeah. It was a very interesting one today. Netflix got destroyed. Oh my gosh, I still can't believe that. Does anyone know when the split is for Amazon? I have no idea. Should hear something about it on the earnings call, but yeah, but futures, NASDAQ down 0.92. Oh my god. It's going to get rough. Ken Griffin. We love you, Ken Griffin. The live Ken Griffin in the flesh. Why do you mine for Bitcoin but burn Shiba Inu? Can you explain? I'm not exactly sure. I'm not too familiar. Like, I know how mining works, but I don't know what kind of context that is. Like, why would I do that? I don't mine crypto, but if I would mine Bitcoin because it's more stable and you can hold value in it a lot better, right? And you'd burn, I guess, Shiba because it's not guaranteed. It's a lot riskier. I guess that's the way that I am taking that. Tell your thoughts on Tesla. We just talked about it. The Tesla manufacturing cost is up. Just the raw metals, 73%. From the start of the year to the end of the first quarter because of really the Russia invasion. So if anything was going to clap Tesla, it's probably going to be that. Like, imagine if Tesla, for whatever reason, I'm sure this won't happen, but with starting Berlin, with doing all of these things, with the increased cost they're seeing, what if Tesla went from 5-6 profitable quarters to a negative quarter? That's what I think could really clap the stock, like pull a Netflix on them, because the duration of that could be extended, right? If this conflict continues, it could get pretty bad. So I have $200 flat, like straight up $200 on $1,200 calls that expire this Friday, and I'll probably buy $500 in puts or $400 in puts, a little bit more on the overweight side on puts. Maybe if I were to ration it out, maybe 150 on this Friday just to catch a big drop if we do get one. And then I might go out to like May 6th or May 20th, because I do also want to capture the Fed and what Fed Jerome Powell says Thursday. And with the weekly puts, it's tough, I guess you could call it that, how to hit on those earnings trades. So Tesla is actually not priced that bad, believe it or not, on a percentage basis. Now Tesla usually doesn't move that much though. Usually they don't. In this market environment though, I mean they can move a lot. Like when the markets were very fearful back here, right? Markets were selling off. Tesla reported earnings, and I'm gonna look into why exactly they dropped last time. If there was something specific that caused them to drop, because I don't remember. I don't follow Tesla that closely, but they did drop 11.5%. But usually they do go up after earnings, right? up 3%. Like in a normal market, Tesla almost always goes up after earnings. Or if they go down, it's a very small amount, like 2%, up 1%. Like it can be pretty muted overall, down 3%. Last earnings was big, and you have a lot of meat on the bone too. But like I was saying, they're not priced that bad for this Friday. You could see a 5% break even. That's $900 though. If you go out to 10% negative to break even, that'll put you at $9 or $915 on Tesla to break even if you spend $255 on these contracts. Now tomorrow, I mean, futures are down 1%. So if that holds up and we open up down 1%, Tesla might be down 2 or 3%. These are going to be much more expensive, so it's going to be a little bit different of a conversation. But even if you want to say, hey, maybe this thing drops to 900 or 850. There's been some option activity from institutional investors at this strike. You can see the open interest is actually 8,200, and a lot of these strikes don't have as much open interest. I thought that was pretty interesting. But that's only $56. But then again, you need to see a 16.5% drop by Friday. So if you don't at least see like a 12% drop and then another very red day on Thursday or Friday, you're going to lose all your money on that. But if you do go out to like May 6th, capture really like Apple earnings, the big earnings week next week, because this is like the first earning that really mattered, and we got absolutely clapped. The woke mind virus is making Netflix unwatchable. That's what Elon says. Okay, I got you, bro. I got you. He says, yeah, don't sell off my stock like that, man. He said, we're just hit by a little inflation. Y'all are hit by left-wing mindsets. It's all right. It's all right. Don't worry. Don't worry. We got you, Elon. We will short you, and then we will buy you. Don't worry. Don't worry. I got you. Yeah, right here. So, I mean, this is like the warm-up. Get ready for next week. You got Activision, if people like to trade that one, that can move pretty big. You got Microsoft, Google, Visa, 3M, GM on Tuesday. And then it's going to be a big day on Wednesday. Facebook, PayPal, Qualcomm, Teladoc, Spotify. Thursday, Apple, Amazon. I mean, your trillion-dollar companies on Thursday of next week. So I want to be able to capture some of that as well. Like Apple controls 7% of the S&P 500. 7%. That's a lot. If Apple were to drop 20%, oh, you're going to feel it in the markets. What would that be if you average that out? I'm not that good at math, but 7%, you get a 20% drop. It's going to move the markets down directly, like, what, 1%? Something like that, if you do the math. It wouldn't be good. And let alone other stocks that drop. So that's really what I want to capture, because I'm pretty damn bearish on Apple, but Apple has their ways of doing things, that's for sure. Like, these motherfuckers have not issued guidance one time since 2020. Not once. Oh, man. They're funny. Like, that's what Netflix should have done. Instead of guiding for 2 million less subscribers, which really killed them, they should have just not guided. That would have been fine. See, or like in this case, you could go for like the May 6th. You could go out further, to a $700 put or $750, right? $750 for 130 or a $700 for 65. Now the key here is if the stock goes up like at all, you're gonna lose on this, at least on the next day move. Now if it goes down 15%, you're gonna make a decent amount of money because you have that extra time premium as well. But 30% drop, that would be crazy. Man, I'd quit if if Netflix gets a 26% drop, and then Tesla, man, if they were to get like a 30% drop, I would just I would just sell my whole portfolio and just YOLO it. Just straight degenerate on everything, because that's not right. But analysts say good things about this quarter despite China. I don't know, but then I expect a drop after volatility. I expected buy dip before earnings. Yeah. Do you know that the average, a 5-star analyst on Wall Street is right about 60% of the time? That's a 5-star analyst. Most analysts are like a 2 to 3-star at that. And they're right like 30% of the time. You know, even take for an example, Netflix. Everybody said 2.5 million subscribers gained. And then you had data analytic firms saying, our data suggests we could see as high as 4 million subscribers gained. They lost 200,000. How do you get so far off there? It's because they all don't know. They're guessing. And a lot of the time they don't have the, they don't even know what they're talking about. You know. We eat crayons at dawn. Yeah, man. AMC looked beautiful today. Just so beautiful, too. We finally got the break of the 50-day. I'm like, dude, this could make a run. And then, boom, 1 minute after market closes, I'm like, shit, it ain't going nowhere. At least, unless we get a catalyst, just pure market momentum. It's not going to be bullish. It's not going to push us up. But we were up like 7% today. But the overall market was pretty bullish. So I don't know. It's one of those things. I do imagine AMC holds up a lot better though. Need to make some money. I'm a little tired of losing my ass. I feel you. Why do you feel so strongly about the rally being over just based on Netflix? Okay, that's a great question. Coming with a good one. I guess for a lot of reasons, and I could quickly run through them. For one, the real interest rates are going crazy. The bond rates look like a momentum stock. And this means that cost of capital is more expensive. The markets should be, and they do from time to time. That's why you see those red days down 1.5%, 2% on the NASDAQ sometimes. They should be pricing in and looking forward to slower growth. And a lot of the market expects that at some point, but they don't know when. All right. So what the real key is, what's the Fed going to do? And how is growth going to be? When is a recession going to come? Even raising interest rates, like a lot of people don't even know, but Fed Bullard came out yesterday and said that we should probably raise by 0.75% at this next meeting. Markets didn't even care. You've hardly heard about it. They don't care about that. They care about the balance sheet and the chance for a recession and slowing growth. That's going to be the first sign. Well, we had bad retail sales numbers. They were under our expectations. And it's simple Econ 101. When you give money out to people, they spend it. So these companies like Apple, the largest companies that control the markets, I don't care what a small company does, but when you start talking about companies like Netflix, Facebook, who's left in there? Apple, Google, Amazon, Microsoft. Microsoft's more businesses need Microsoft, so I'm not as worried about Microsoft, but especially those other ones, Amazon and Apple, very concerned about those ones. The data does not look good, and they control almost 10% of the S&P alone, just those two. It's kind of crazy. But as you see, companies not performing to analyst expectations, that's where stuff really starts to get bad, because people expect earnings just to keep growing, right? They expect a slowdown. You've probably heard that. They expect growth to slow down, earnings numbers to slow, but they don't expect negative earnings numbers. Now, if Apple comes out, which they're not going to guide, they haven't guided in 2 years. They don't want to crush the stock price. But if you start to see like, hey, this first quarter was worse than the first quarter of 2021, we might have to expect a lot less for this year. Simple Econ 101. You give out free money, people spend it, earnings are great. People are not really getting free money anymore. It'll be interesting how taxes and all of that plays into, like, I guess that was like part of Q1. When do people start to get tax returns back? I had to pay taxes, but when do they start? Like February-ish? February, March-ish. So yeah, that might have somewhat of a boost, but overall, I think you're going to have very weak numbers coming out. And I think Netflix kind of foreshadowed it for us, because Netflix, right? Check this out. It's called a churn rate. So I'm sure you guys have done it before. You sign up for a streaming service for 1 month, you watch something, you don't watch it anymore. That's a churn rate. Netflix, all streaming platforms have a churn rate. People come, people go, they go all the time. Well, even Apple TV, they have a 60% monthly churn rate. Netflix has one of the lower churn rates at about 20%. And they're even seeing people leaving, right? So you could base it on a lot. Maybe people have less money. Doesn't really matter. If, Netflix was not a good sign. Netflix was not a good sign. And the markets are going to look forward to that, especially if Tesla earnings are bad. It's not going to be good. Now, like we seen last earnings, this is a lot based off of last earnings and just the economics of all of this. But last earnings, Netflix reported January 20th, right? So we were down 1.11% on the market. We were down 2% the next day. And then this day was that weird day where you had went super low. Like, what was that? 419 to, well, you had opened at like 438 and went all the way down to, or actually you opened at, sorry, it's kind of hard to see this, at about 419 and ran all the way back up to about 438. So that was that weird day where people started to talk about trading halts, like we could drop 7% and get halted for 20 minutes, which those are crazy. But all in all, if you include the low that we hit there, you dropped about 9% after Netflix reported earnings last time. We did recover in that one day, and that was historic. And then we rallied, and then we came down and hit lower lows. But last earnings, company earnings were pretty good. I mean, Facebook and Netflix, those are the ones that got clapped, but Apple did very well. Amazon did well. Google did well. Now if you see that reverse, it's not going to be such a good thing. And even Amazon, they said this about a week ago, 2 weeks ago maybe. They said that Amazon just cannot handle all of this inflation that they're seeing, all of this. I'll try to find the article, actually, because I'm like, whoa, that's kind of telling us that earnings are not going to be good. Then like this, Amazon adds 5% fuel and inflation surcharge to seller fees. That's basically telling you that, they can't handle it, that it's really hurting the business. But there was a specific article. Amazon raises prices to keep up with inflation. Yeah, that's basically the same thing. That's like dominating headlines. But there was another one before they did that. Might not be able to find it right now. That's literally every headline. But yeah, they basically said that they that it's hurting the business. That's not good. Amazon is, a direct link into the consumer, so that's going to be important right there. But where do you think Netflix heads from here? Man. If it's anything like last quarter, like Facebook or even Netflix to a certain extent, they really didn't drop too much. They did hit that low when the markets were really volatile, but they held this range, from 330 really to like 385 after earnings. Couple times they they did do better, but it always reverted back to that range. Now you're chilling down here at this blue line. I mean, you could probably trade down to say 220, 215, and then trade in between there, because some people are saying, hey, Netflix is no longer a growth stock, that they need to switch to more value and take a value approach. I don't know if I believe that as much, but it's definitely quite alarming they lost that many subscribers when they were forecasted to gain so much. But yeah, back to what you said, Liana Garbin. I could be wrong, though. I totally could be wrong. I could be underestimating everything, but from what I've seen, from the clues that I've been given, from what CEOs and what companies have been doing, they're very alarming signs. They're kind of trying to soften the blow. Like with Apple, for an example. I'm not so bullish on Apple. Why? Because Apple is trading more rich now than it has traded in a very long time. It's at like 28 price to earnings. Why are they trading so rich? Well, they are trying to branch out from being a hardware play. Most people attributed Apple to either it's going to have a good or bad iPhone year. Now they're trying to get more into subscriptions, and that's going to be valued higher. That's why Netflix was valued at like a 40 or 50 price to earnings ratio not too long ago. Now they're at like 30 something, and that's still, up there a little bit, but they've branched out. Now, you're getting signs from Apple that they're trying to diversify their income even more as of recently, like trying to do a subscription phone service instead of just selling phones. Now, what that is telling me is not enough people are going out and actually buying the products. And I think it's pretty straightforward too. If you wanted an iPhone, AirPods, iPod, or MacBook, you went out and got that with either your stimulus check or your unemployment bonus if you got unemployment, right? People went out and got those things. So there's not a huge demand from a lot of people to go out and buy more, at least not in America. China could be a little bit different. That's really the oddball there, but it's going to be very hard, long story short, to beat 2021 numbers. It's going to be very, very hard. And, I mean, if you can at least grow like high single digits, low double digits, not going to be good. Not going to be good. I was going to push markets down. Yeah, that's my thought, and that's why I do want to have some puts for it too. But things can still go either way. I mean, you heard from Fed Evans and Fed Bostic today, and they basically said that, especially Fed Bostic, he spoke on CNBC and basically said that we do need to move to get rates higher. We need to go to neutral, which is about 2.5% by the end of the year. But he's not so certain, and they're having this debate within, members of the Fed voting committee, if they could push us into a recession. Like, are they going to? How is the economy going to react? And that's where they're getting a lot of different opinions there. Some people like himself say, hey, maybe we could go too hard, too fast, and push the economy into a recession. Obviously, you don't want that to happen. So he was voicing more cautious approach, I guess you could say, earlier today. So that was actually seen as bullish, and that's why the markets did start to rally into the close. I mean, pretty clear, and then you did sell off the last 5 minutes, but you got a stern rally when Fed Bostic was speaking about that. And then, came back up and tested new highs towards the end of the day and then sold off, probably in anticipation of Netflix earnings. And I mean, at this rate, you just buy puts on Netflix every time and you'll do great. Not financial advice, but, also believe Don't you think Elon, being a genius, has his earnings come out after all Fed talks? He's pretty damn smart. Yeah. He chose 420, so maybe he'll joke about, I don't know. Maybe he'll joke about something and it'll be fine. Avoid the carnage, but you know, um, Tesla's in an interesting situation, and yes, that's a good point. Elon is the CEO, so it's like, the CEO management very important, and I think that's why Tesla really doesn't drop crazy amounts, is partly because Elon is the top guy, and historically you don't want to bet against Elon or you lost a lot of money. But this time could be a little bit different. There is no love for stocks with 200 times price to earnings ratios. Or let's go ahead and check. Like, Tesla is on a book value expensive. Last time I checked, it was like 200 price to earnings ratio. Netflix was at like a 50. So Tesla would be like 4 times more expensive. Now you could say, well, Tesla's going to become this company. It's going to be a $10 trillion company in the future. Maybe you're correct on that. Maybe you are 100% correct. But if Tesla shows signs that they are slowing down and there is a doubt that they might not be, people will sell off a 210 price to earnings ratio in no time. In no time. You could slash that in half and it would still be book value expensive. Like, the price of Tesla could go to 500 and you would still have a bearish case on Tesla if we were to go into a recession and things were to get bad. So I love Tesla. I like Elon Musk. He's definitely who I would want to run my company. But in this market environment, if you cannot prove why you deserve 4x the valuation of Netflix or 18x the valuation of Apple, you're not going to keep that valuation. Your price of your stock is going to go way down. So that's really the concern, I guess, with Apple. But Elon, yeah, he is the head honcho, and he is historically, you don't want to bet against him. But 210 price to earnings ratio in a time where fundamentals are important. If you got 73% increase to cost, the only way to offset that is to buy another miner and take on potentially billions of dollars in more debt or lose billions of dollars in cash. Either way it goes, it might be a bad situation. And I honestly have not heard anyone say, like, the metals to build these batteries, because the battery is the most expensive part on a vehicle. That's certain, right? A battery just from just to replace your EV car's batteries, like $10,000. Very expensive, not cheap. So if that has went up, other things, shipping costs, I think have came down, but have went up a little bit recently. I don't know. Yeah, they're actually talking about it on the news right now. Netflix lost subscribers. Now, yeah, not going to be pretty. 2022 is going to be a real shit show until expectations come down. Expectations are still for just earnings beats across the board, and it's not necessarily guaranteed to be the case. But you think another platform might take Netflix spot? No, I don't think so. Like, I think Netflix will likely remain the largest player, just because, my personal opinion, they make such good content and they make enough of it, right? And that's the most expensive part. You're stuck between, do you license out content or do you buy it and it's on your platform forever? Both of those, very expensive. So there's no easy way to do it. But it makes more sense to play the long game, make your own content, and that's hundreds of millions of dollars for good actors to make good shows, good series. So it's not plausible for a lot of other companies. You have to go into a lot of debt before that ever would get paid back, I guess, if you want to call it that. So it's very hard. It would be very hard to take their place, and I couldn't see anybody doing that. Like HBO Max stuff's cool, but it's like it doesn't. I guess I like a lot more that is on Netflix than any other platforms. But you could definitely have more competitors catching up, right? Like Netflix might not be like the noticeable top guy, but I think they will though. HBO Max since is included if you have AT&T Unlimited. I do like HBO Max too. Elon has his workers staying inside the factory during COVID breakout in China, so they are producing cars. Elon puts everyone to work even during lockdowns. Yeah, yeah. Um the thing that theoretically, could clap Tesla, because I was thinking like, what could possibly clap Tesla? Like you could have made the case for Netflix, like. Before earnings, I would have said, yeah, very, very unlikely. That was kind of my mindset. Like, estimating 2.5 million subscribers. Maybe it'll come in at like 1 million. Markets might panic a little bit, but it could be worse. No, it came in at the could be worse scenario. You lost subscribers. Not good. You're on the chopping block. With Tesla, really the chopping block would be if Tesla lost money in the quarter. That would be like, whoa, what's going on? Metal costs up 73% on average, across the board in the first quarter. It theoretically could happen, right? That's the only thing that I could see that would really clap Tesla. Or if if Elon maybe announces that he's sold stock, right, to finance the acquisition of Twitter. That would clap Tesla because he would have to sell like 30 million shares. So there's a couple things, but it's like the probability of these things are normally very, very low. But considering what is going on right now, I think could be a little bit more probable. Tesla pullback 700-ish, then boom. That's pretty much That's pretty much it. That would be the low on Tesla during this last rally. So there's a lot of meat on the bone, I guess. Like Tesla flat out like bottomed out at $700 even. $700.00. Yeah, so if you get a bad earnings, I mean, if you break under 893, then it's just, I mean, you could go lower than that, but I wouldn't expect anything under like 700. Like I don't even expect like a 20% drop, but after Netflix, considering Tesla's valuation, you have a lot to prove. Just being Elon Musk at the helm of Tesla is not going to prevent a 20% sell-off if the markets get surprised. Hell no, 2022 is the year of the ape. Yeah, so far it's the year of the clapping. But yes, it is the year of the ape. Vehicles are essential. Yes. Just the cost of the vehicles could clap them. Keep cash. I agree. Some downs of FedEx striking next week. Tesla has plans to build their own battery plant in Texas too. Yeah, all of that stuff takes a lot of money too. So depending, how much they spent, all that. Like I'm a Tesla bull, but given what we just seen, short term, you could definitely come down in a substantial way. That's like very, very possible. I see the Netflix loss as a catalyst for AMC. Pretty much. I mean, a lot of people own Netflix. Thanks to gas prices going up, price of everything has gone up. Everyone is getting rid of non-essential expenses. Yeah, that's kind of what I've heard too. I don't know. Does Tesla give guidance? I don't know if I don't like I said, I don't follow the stock too much. I kind of missed the boat on that one, so I'm really waiting for a substantial pullback. Should have got some on the last pullback, but did not. Tesla bulls believe Tesla will easily beat 1.6 million deliveries with 30% margin, so it is still under promise / over deliver earnings surprise story intact. At the same time, Tesla provides clarity to non-believers, cover to believer analysts, and determines FUD narrative win-win. Yeah. So that highlights it perfectly. 30% margin. Like, if you don't have a 30%, if your margin goes down, that's not so good. Or 50% growth guidance. Like, geez, dude, it's possible, but I think if they could go back to January, they would not be saying 50% growth. I wouldn't bet against it. I will for an earnings reaction, but not the whole year. But still, I don't know. I think things in the last 3 months have really developed in a substantial way. But he raised car prices, so it's priced in. Yeah, see, I would normally say, well, yeah, but with the markets worried about the consumer, the markets are not just going to believe what somebody says, right? Unless those vehicles are sold and paid for, then it's like they're not going to take it for face value. Like Netflix could have said, yeah, we lost 200,000 subscribers this quarter. We expect to gain 2 million next quarter. It still would have got clapped. But I definitely see what you're saying. PLL. Oh, Piedmont Lithium. Oh yeah. Yeah, pretty this thing has had its runs. That's for sure. Yeah, and this is lithium. And that definitely goes into car batteries. And nickel? You guys seen the price of nickel lately? That shit is crazy. So yeah, that's really what could clap Netflix or Tesla. And I'm not like overly like I don't want to say I'm overly bearish, but I think there's a lot of high expectations and there's a high valuation to meet. If anything is too bad, then it could face the same fate as Netflix. And especially reporting right after Netflix, people are going to be quick. Sell. Like, yeah, I wouldn't want to face that, honestly. Also, we are shipping 0 containers and a ton of tank cars and a lot of paper and grain. Tank car unit train 2 or 3 a day is crazy. Yeah, I have no idea what that means. Shipping 0 containers and a ton of tank cars and a lot of paper and grain. Tank car unit train 2 or 3 a day. It's crazy. Is that like good or bad? I'm not familiar with like the freighting stuff. What do you think about Snap earnings? I think I think advertisement's going to be good, and it's kind of disappointing because last time Facebook reported before Snapchat. So Facebook had bad earnings, dropped Snapchat like 24% the same day, right? And then you had that crazy 60% rally in after hours. We hit that trade. It was pretty easy to see because the stock was down 24-25% the day they reported earnings because of Facebook. Well, now Snapchat reports before Facebook. So it's going to be a little bit different this time around, but I think Facebook is likely to see the same thing as they seen last time, to see people leaving Facebook again, to see cost at Facebook going up, like more losses, right, going to create the metaverse. I've seen like ads and different things for it. and they were buying something, or I've seen a couple news headlines since last quarter about the metaverse or whatever. So if Snapchat can actually grow users and continue to grow profits, have their second quarterly profit ever, then it's going to be a very, very good thing. But, you know, overall, I would go long on Snapchat before I didn't. But there was weakness in advertising in January and February. Remember, everybody was saying their ad rates were down? So that's the only thing that I would be a little bit concerned with if I was like putting a lot of money into calls. But it's normal again. It's not anything crazy. I do own a lot of Snapchat too, though. Well, that's relative. I own like 200 shares, like $5,000 of Snapchat. So I hope they do good, or I hope they crater so I can just buy a shit ton more. Some guy on YouTube is an investor and plays options on Tesla. He has estimates from analysts saying, yep, 17 to 18 billion in sales is Q1, so I think it's accurate. Yeah, that is the estimate, is 17 to 18 million in sales. No, they do numbers in the billions. They do yeah. So what's this? Yeah, they did 17. Yeah, they did 17.72 billion. First. Well, it's delayed. So this is actually for the fourth quarter of 2021. They did 17.72 billion. So, yeah, 17, 18 billion, closer to 18 billion. That's pretty much the estimate. I think let's just look. Oh, why is it lagging? It's lagging. Why is it lagging? Jeez. Per data from Yahoo Finance, analysts expect that Tesla generated Q1 2022 revenues of 17.76 billion. Yeah. So that's the estimate, 17, 18 billion. Tesla reported 10.389 billion in revenue. Oh yeah, that's for last year. At a time. Near-term supply expectation concerns. Yeah, Musk's Twitter deal could be a smokescreen. However, for the Barclays Johnson, the recent soap opera involving Elon Musk's proposed Twitter buyout may serve as a smokescreen to shield Tesla from eventual weak Q2 guidance. Johnson believes that Tesla stock shouldn't be too much affected right away due to investors' attention on Elon Musk's bid to buy Twitter, but Wells Fargo analyst Colin Lagan has a different view. He agrees that if Musk's bid for Twitter were successful, he would potentially have negative consequences for Tesla. One of the potential effects is that Musk would need to sell Tesla shares to cover his $39 billion offer for Tesla or for Twitter. That would put pressure on Tesla stock. The future looks bright for Tesla's production, which, I agree with all of this. And I do have calls too. So I'll be playing it both ways. Like, don't get me wrong. I'm not only looking at puts. Like, I'm not that bearish. I'm not going to. Snapchat. My snap average is $4. There you go. Yeah, I first bought Snapchat at like 13. 10, 9, 13, somewhere around there. Snapchat overvalued for an app I could make. I would like to agree with you, but I guarantee you could not make Snapchat. That's a very hard app to make, actually. It takes a lot of programming and a lot of money. ISPO and it went up. Oh, man. I watch a lot of YouTube. I second that, Carla. There's a few good ones out there, but Tyler is my man. Tyler's my man. There we go. Appreciate you guys. Yeah, I do watch a lot of YouTube too, and you really want to get the opinions. Like, that's what I want. That's all I care about is I want the opinions. What do you think is going to happen? That's, this is all my opinion. Like, I have no idea if Tesla's going to, like, it could rip up 15%. And for all transparency's sake, I have $200 on calls for this Friday, $1,200 calls. I made them free, so they're pure profit. So I'm not risking any money on that. They're already free contracts from making it free, basically profits of another trade. And then I might buy puts, or I don't know, depending on how expensive they are. If the stock's down 3, 4, 5% tomorrow, I am probably not going to buy puts, or I'll keep it small because I'm not convinced either way. What about Union Pacific Railroad earnings this week? I don't really know. I know obviously like what they do and all that, but like fuel cost, I guess you could say, would be like a negative thing for them. I don't really see there being like a huge reason for them to move big or move that much at all. But I've heard good things about it over the last months. Sometimes I forget railroads are even a thing until I get stopped by one. Until I'm driving. I'm like, damn, there's a railroad and just train coming. Then I got to sit at it for 20 minutes. And I'm like, yeah, these things do exist, huh? What's up with SoFi? Well, SoFi is really hit by the expectation that rates will keep going up, that the Fed is going to act so aggressive they push us into a recession. It's going to be so ridiculously expensive. Nobody's going to go get loans. So the main segments of SoFi's business are not going to do as great. That's the long story short on what's been happening with SoFi and why it's almost every single day you hit a new all-time low. Every other day at that. And I think there's a lot of opportunity there. I think there's a lot of potential upside if that does not happen. But rates are definitely going to keep going up. And I've been buying some. Like, I bought some a while back. My average is way too high. But I don't really see a sharp reversal anytime soon. It's a really good, in my opinion, long-term buy and hold. Just to maybe get in now, maybe buy some later, If every ape is willing to spend $2,000 and buy one call, $5 strike and exercise it, it would not show that we own the company at least 20 times over. I see where the logic is, and it is smart logic, but market makers, they can create basically IOUs, right? So they could create those shares. Does that make sense? Like, that's their legal obligation to do that if they have to. So I don't know if it would directly show something, but it would definitely push the stock up. Have you guys ever seen like a call sweep come through, like a stock just start popping for no reason, but they're very short-lived, right? Like like within 2 minutes, it's like the stock can run up 5-10%, come straight back down. That's really like hedge funds and large option orders going in at like the $5 strike, where you have a low break even. Like on these Teslas, dude, it's just wild. Like sure, if you spend, how much is this? $18,000, you could get a Tesla put that has a break even, and you profit if the stock only were to drop. Wait, you profit? What? That ain't right. Okay, well, it says you're actually technically profitable when you buy it, but that's definitely not right. They would not fill you at that. Let's just say that you spend $14,000, we'll get you a put that you're break even if the stock drops 0.02%. So what happens when this happens? What happens when I go out and buy a put that is so far in the money with a break even price that's like right, it's flat basically. You're only really getting the leverage there. Well, the market makers, they have to go out and hedge when the stock falls 0.02% or 0.04%, whatever this number is. So it would push up the stock a lot, but it wouldn't necessarily show like anything that you could definitively say. Does that make sense? Have you checked out LITM next DWOC with volume? Oh my gosh. You just see. But honestly, like, I did not expect what we seen with Netflix. Like, I was thinking to myself, like, I've been doing this for so long. If a stock drops 20% its last earnings, like, it has to be very, very bad to get a 20% drop, which Netflix was not good, but it's not like they lost 2 million subscribers. They lost 200,000. So you could say in the grand scope of things, it was kind of flat. It would have been positive if the war never happened. Like, sure, did the stock deserve to go down a little bit? Yeah. 26%? Probably not. Right? So I'm like, man, even if it's really bad, there's no way the stock moves 20%. Well, that happened. So it makes me reconsider kind of everything that I was thinking. Like, if one thing is too bad, you're on the chopping block. And the chopping block means if you fuck up, or like, take for an example a chicken, right? You're a farmer. You like your chickens. Your kids like the chickens, but you got to eat, You got to say your prayers, chop his head off. So that's kind of what it is. Even if you like the stock, if they fuck up, it's the chopping block. You can shave off a good 20%. But yeah, if you guys hear me say the chopping block, that's what that means. Bet Netflix marketing is having some meetings tomorrow. They have the worst PR team I think I've seen in a long time. Like, yeah. Though a long time. It's terrible. What do you think about Mullen as a long-term stock? Well, it's one of those, like, if they do become something that is actually like delivering vehicles and doing things, then I mean, it would do very well. But it's a very capital intensive business. So the only American car companies that have never went bankrupt or filed for bankruptcy that are American is Ford and Tesla. That's it. Every other American car company, according to Elon Musk, I did not fact check this, but I believe him, has declared bankruptcy at least once before. So, and that's really during like economic slowdown times. Like that's a big problem for Tesla too. If their costs are going up, if the consumer starts to look weak, I mean, car companies do not do well during times of a recession. You know, people buy that cheap used car if they have to. I guess that's something else you could call out that might not be so good for Tesla. I don't know what their guidance would be, though. That's going to be the most interesting thing. Like, what is guidance? And Elon likes to fuck around. That's why Tesla's earnings are on 420. He might surprise us with something that's good or bad. He might think it's funny to watch the stock price go down. He said it's overvalued before. So it's like, you got to really impress investors to keep it at a 200 price to earnings. Our stuff hype chili said are different streams for different reasons. Oh yeah, I agree. Netflix put 260 or lower. It shows a profit. Netflix puts. Damn Netflix. Good old Netflix. See, I probably wouldn't play the ones that expire this Friday, but they're going to be so expensive when you look at them. So expensive. Like, all of these prices are going to be way different. Like, these are going to be like thousands of dollars. So it's not even like the same thing. You know what I'm saying? And I couldn't even guess what they would be. Like I could, but I could, it's really hard to tell. And I got the $1,200 call. I don't know. How far is that out? I think that's like 10% out the money, isn't it? 20%, something like that. 8, almost 18% to break even. That's tough. So 18% break even cost $100. Let's see what an 18% break even on the put side is. Wow. Okay. It looks like puts are cheaper on Tesla, way cheaper, but tomorrow that'll probably even out if the markets are down like the futures say they will be. Oh, only down 0.86%. Hopefully things are green, because then you can get some cheap puts. I'm gonna YOLO some money on a Tesla put tomorrow. That's the tough part. Elon smokes pot. Well, yeah. It'd be funny if he's like, burn it to the ground. His own stock. I could see that. I mean, he might sandbag. It's not a bad time right now to sandbag your earnings. I don't think that's what Netflix was trying to do, because they already did sandbag their earnings, but just did terrible anyways. And sandbagging, just so you guys know, if you guys don't know, is basically like like underestimating, overachieving. That's what companies want to do, right? They want to say, like, Tesla, we expect 50% growth, but really they expect 100% growth. That would kind of be sandbagging. Now, if Tesla came out and said, yeah, not looking so hot. It's production costs are up like 70%. We're not doing so good. And guides much lower, and then comes in, and it's a lot easier to beat that guidance the next time around. So if you guide for like, say, 15 billion in revenue next quarter, which this quarter is going to be like 18 billion. If he comes in and says that, stock price gets destroyed. Everybody thinks it's the end of Tesla. You got the bears coming out saying, I told you so, right? But then that next quarter comes, the estimate's 15 billion. They come in at 20 billion. Then you're like the fucking guy again, right? And everybody starts to buy your stock. Tesla's ripping. You get what I'm saying? That's sandbagging. So maybe, he could do that. And I say it's a good time to sandbag because your stock is held up very well and you're heading into a very uncertain time. The last thing you want to do during an uncertain time is forecast. Like Elon doesn't want to sit here and forecast 20 billion in growth next quarter and then come in at 18 billion and miss massively. And then after that, it's like, where do you go from there? Well, if things are staying flat or not getting better, what do you guide at? 0% growth? So it makes more sense to get ahead of it now. Maybe Elon knows that. Maybe it's just speculation. It is. It's all speculation, actually. But we'll see. We'll see. I think there's a case for either side there. If Elon comes out and says we've secured our materials, costs are not going up, you might see a 73% increase on the spot prices, but we got our guy over here, we got the plug on some lithium and nickel before the short squeeze happened, so we're all good, don't worry about it. Production's good, just started Giga Berlin, we're good, don't worry about it. We're going to expect 50% growth still. I mean, the stock would probably be up 10 to 20%. But, vice versa, if they come in and say, yeah, we're really getting hit by inflation. This shit needs to stop. We're losing, our margins are going down. We're going to have to buy somebody else. We're going to have to take on more debt or use our cash to buy a miner. Could be taken as negative, especially if those margins go down. I think he's bullish on his company. Oh, yeah, me too. Yeah, sandbagging is sandbagging like your earnings is a bullish thing, right? Because you're setting low expectations. So if you set low expectations, it's a lot easier to beat those expectations. And with a stock like Tesla, it's like, how low is it really going to drop? Tesla's not the stock that's going to drop in half. Netflix, Facebook, sure thing there, but you could see that a lot more than a Tesla. So it's actually, believe it or not, a bullish thing. Like that's what Snapchat did last earnings, right? Snapchat sandbagged, and volatile times come, shit's going down. Facebook just had terrible earnings. Well, it was a lot easier for Snapchat to beat their expectations because they sandbagged the earnings before that. Yeah. And it's like if you thought that the markets were going to come down, Elon knows people. He has a pretty good idea of what this year is going to look like. He called out a recession when I was calling out a recession in October, November, and he's a lot smarter than me. So, I mean, he knows. So it's like you want to give people low expectations now so when times are bad that you can still perform. You can still beat those estimates. HYMC will supply them with everything. That's a good call. That's a good call. Bullish calls. Can we buy calls? Who's that investor that just loaded the boat on Netflix around? Oh my gosh, yeah. Was that Kevin O'Leary? I think that was Kevin. I think that was good old Kevin. So if you buy now, they won't honor the price in pre-market. You can set an order now, but depending on where it is in the morning, Netflix is exploring low-priced ad-supported plans after years of resisting. This came out way late in the after hours, like way late. So there was not a lot of volume that was in the stock at this time. So it's going to be very interesting to see if we do bounce off of this. Probably not, because I listened to the earnings call and they said that it could be like a year or two before this could be implemented. So I don't think investors are going to be willing to give them the benefit of the doubt for a year or two. But we'll see. Or what's AMC looking like tomorrow? This guy is a hack. Man. Thank you. Thank you. I appreciate it. Yeah, tomorrow I think it's really going to depend on the markets. We did close above the 50-day. And then due to Netflix earnings, we're now under that. But not by a lot. Not by a lot. So it's one of those things where we could either catch a bid right off the open of the day, right? And the stock market could come back up, and it could leave Netflix behind. It totally could, but it's kind of going to leave a bad sentiment in people's minds. And it might be kind of hard to come up from that, but it is possible. But yeah, the 50-day moving average, that's the most important level. And I just don't know. Based off of futures right now, it doesn't look good, but you can't really hold too much weight to futures. That's for sure. All right, ladies and gentlemen, that is going to be all. About to get off here, get ready for the good old day tomorrow. Hopefully hit those trades. So like the video if you guys have not already. Subscribe to the channel. Get your free stocks down below. If you guys want to come trade with us as well, link down below in the description. Thank you for watching. Enjoy your night, and I will see you.